Welcome to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon, and today we're going to have our weekly strategy roundtable discussion where we talk about current market conditions and any questions you might have. For those of you who are new, welcome. This is my brief bio. The difference between Tradespoon and maybe some of the other subscriptions out there, newsletter, is that we're very focused on technology. So my background is technology. I was a CTO of several publicly traded companies in fintech space. Since the companies went public, I built a team of financial engineers for Tradespoon. We've been doing that over 12 years now in Tradespoon, and assemble a team of financial engineers that are building models to come up with the trade signals in the market. And then I am using these signals to trade in a live trading room, right? And you have a live trading room every day. Disclosures are very important. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor a CC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. All right, let's take a look at the market. So it looks like sentiment is changing, right? From soft landing to basically recession, right? And that's the narrative, right? After FOMC meeting, initial reaction in interest rates were dropping slowly, right? And the market, at least value stocks were making new highs. But then on Thursday, right? On Thursday, kind of market reversed, right? Basically saying that Powell he's indicated that September is on the table, but I guess didn't say that for sure we're gonna cut. This is kind of, it's on the table possibly, but not enough. And then obviously earnings from Amazon today or Intel did not help, right? Amazon is down 12%, right? Sharp sell-off in Amazon, sharp sell-off in Intel, more than 2 standard deviations, 30% down Intel. So people are nervous, right? And the idea that today on the unemployment data, right? Unemployment data ticked up, right? So not only that manufacturing is slowing down and housing data is slowing down and durable goods orders slowing down, and but also the unemployment rate is ticking up to 4.3%, and number of new jobs created was significantly less than predicted, right? So the narrative is changing from soft landing to recession, right? And I mean, we talked about this for the past 2 years, but there were no signs of recession. Now it seems like people are kind of saying, well, maybe there is a recession. 10-year yield is at 2024 low, kind of a precipitous drop in yield. People are shifting into treasuries, right? Buying treasury. VIX is at 27, right? You have a sharp jump in VIX to 27. And the biggest issue is there's not enough positioning to hold the bears, right? I was looking at spiders. We talked about 520s being support in August 16, but still 30,000, it's not that much, but you do have 515, 520 support. So I assume at least until 520, there is no support, right? There's no support till 520. And that would be the next kind of a decision, right, for the market makers. Spiders kind of precipitously dropping, right? We broke through the 538 level, broke through the 50-day moving average, and small caps, right? The biggest indicator of recession is that the small caps that don't have strong balance sheets also kind of a precipitous drop, right? False breakout, which is usually, I mean, it's a 50-day moving average. We'll see if the 50-day moving average will hold. Small caps have been outperforming technology, semiconductors, and spiders, but nonetheless, the April high or March high, we are trading below that level. So that's another area of concern, right? And regional banks, kind of sharp pullback, ARK Innovation, sharp pullback, making new lows. So all of that is pointing to the recession. And you have consumer staples still positive, AT&T, people rotating into safety asset classes. So kind of a typical, kind of a classical risk-off trade recession. How far can it drop, right? That's the question. That's what's on everybody's mind. Well, we don't know, right? We don't really know. I'm not sure. Earnings, all the mega cap technologies, have announced earnings. We don't really have, I mean, the next, I would say, kind of earnings event that can move the market would be NVIDIA, and that's not till the end of August. And August usually pretty bearish time, right? We talked about, is this a repetition of last year, right? And it seems that way, right? And same thing happened in basically almost to the day in August, start of the August, right? As soon as we start pulling back, we dropped close to 5% on S&P, right? We bounced back in September and then had another drop, 10% total. Almost a similar price action. We're already down, I think, more than 5%, no, close to 5%. Were we down? Yeah, we were 6% down, right? So we're down 6%, just like last year. We probably could bounce back, right, going through the consolidation, but I think August and September is going to be volatile, right? And they're going to be volatile, and we could have at least, if this level doesn't hold, right, and we're already breaching shortly the May highs, then the next level of there's not really any support till 520. That's 2 standard deviations, so it'll be 8%, and then April lows would be 13%. So those are the main levels that bulls have to look for. So I assume 520, at least will pause. I don't know if it's going to hold, but at least it's a June low, so it should pause. Market is getting to oversold levels, but same thing, probably bounce back to 540 maybe, or 530, and then, I would say that's the core scenario, right, for the next couple months, right? That would be at least one of the scenarios, right? One of the, I would say, probably more based on technical indicators in the price section, more likely scenario, right? So sell into the rallies. Short-term market is getting close to oversold, right? 2 standard deviation usually, but we're still not close to 200-day moving average. So for now, I would watch the 520, right? We basically already took out 530 level, so next level is 520. In terms of how well it's positioning, will not hold. So till August 16th, right, we have at least 2 weeks. In the next 2 weeks, we do have till 520, some position in 515, 520. If that doesn't hold, the largest position, 500. Not a lot, right? There's not a lot of positioning at these levels. Let's see. And next week, yeah, so people are not hedging next week. So then we have 920, September 20. I mean, you do have 500, but again, not a big position. So, and the next level is 480, right? So 480. So in terms of positioning, I would say there is, until the volume of puts is going to grow, where people, market makers will have to be long again and have to start buying stock. Until then, this is a pretty vulnerable setup, right? Whether it's a small caps, spiders. We'll see how the Friday close. It's already 9:45, but it looks like kind of a precipitous pullback in the market. All right, so 3 scenarios. Let's go through them. One scenario we talked about for the past couple days. We're on the better than expected earnings. We're going above 560. If the Fed will cut rates in September, if the earnings would be better, then that's one, right? Possibly. Scenario number 2, we're trading in the range, right? Well, at this point, I would say 500, right? So we broke 50-day moving average. We broke through, through the breakout, the previous breakout, or trying to pull back. There is some support 520, but I mean, it's 2%, so it's kind of hard to imagine that that level is not going to be tested at least several times. So At this point, well, that's what let's do this. So scenario number two, we're trading between 560 and all right, 520 level is actually going to hold, right? Scenario number three, 520 doesn't hold and we retest April lows, right? Because from technical perspective, as long as we trading above 500, then the bull trend is still, the long-term bullish trend is still intact, right? If the April lows holds, right? So that's scenario number three, and scenario number four is recession, right? We take out, 500 level, 494, 500 level. We take out that level, and we're going to scenario number four, recession trade, right? 1, 2, and 3 is all soft landing. 5-10% pullback considered to be healthy in any bull market. Once you start pulling back more than 10%, right? 15, 20, 25%, dropping below 200-day moving average, breaking through the April lows, then I would say this is more of a recession trade. So TLTFX size, thank you, Bob. So hedges, obviously, we do have hedges. That does help. So position size is very important. We have to look at that. So Joseph, retest of April lows is coming. 4. Okay, so 4 is actually break through the April lows. So we have 4. Fed is late in 3. Okay. So I'm gonna go with 3. So a lot of you, nobody does 1 or 2. Okay, I agree. So I think core scenario is 3. This was probably worst case scenario is 4, right? Worst case scenario 4. So how do you, then that means we need to hedge, right? If everybody thinks that this is only, it's gonna get worse, right? Semis already took out the March highs, right? Semis are basically on its way to retest April lows, right? 200-day moving average. And usually that's where, if semiconductors are heading to that level, then spiders and QQQ too. I mean, short term is extremely oversold, right? Still ABC pattern, right? You have kind of a precipitous drop. A, we try to consolidate. B, right? We're gonna probably have a couple more of these sharp rallies like we had this week where NVIDIA is, one day it's up 10%, one day it's down 10%. So something like that is probably gonna happen again. So that's semiconductors, right? So how do you hedge? And again, the model basically, if you look at the 6 months prediction, it's going to get adjusted, but it got adjusted actually for August. It still sees bullish uptrend, right? Even though we're breaking through that, so this bullish trend is going to be, a lot less, but still bullish uptrend in spiders, right? Long term. And I agree with the model. I think we do have a bullish momentum as long as the 495 200-day moving average holds. Then I think this would be, the bullish uptrend will stay intact. Any questions so far? Let me see. One second. Okay. So we do have 2, 2, 2, 2. All right. So everybody, most people think that 520. I mean, 500 will 494, 500 will hold. So how do you hedge, right? So this week I had a QQQ put spread. I closed it, right, because the market was oversold. We did break through the support level. So at this point, I have spiders hedge, right? Spiders hedge that's basically gives me protection on the downside. So that's the spiders, 540, 525. We're already at close to 525 level on spiders, right? 531, touch 529 level. So that's the hedge. Right now it's only $6 because it's still September, but this level is broken. So at this point, I would say maybe add to a hedge if it gets to 540 again. But I did change the price, right? I think it was $6 or $7, so I decided to change it to 11 because I think we're gonna, at least for now, 540 should, for bulls to be able to reverse the trend, we need to, get back above 540 again. But it looks like decisive breakdown below 540, and and same thing is happening in small caps, right? Small caps basically almost gave up all of the gains, since the breakout of 210, right? So now we're, next level is closing the gap at 200. So that would be the hedge, right? You can buy spiders put spread is one way to hedge, 520, 540, 525, maybe, add to it on the rebound because short-term market is oversold. What else is working well today? TLT, right? Treasuries. So treasuries is a popular trade. TLT kind of vertical move to the upside because people are concerned, right, that the market sell-off is going to accelerate. You can see VIX kind of 50% move, vertical move to the upside, and there is really no. I don't know when was the last time VIX was at these levels. Well, 2020, March of 23, right, when we had regional bank failure. A couple of the regional banks failed, March of 23. So this is the last time we were at these levels in VIX, right, a year and a half ago. So 32, 36 is an overhead resistance. That means there is still room to the downside, at least, in the next couple of weeks. What else? Value stocks was a pretty good hedge, but for now it's following. Recession is not good for value stocks either. So you do have value stocks pull back sharply. It's still staying above this uptrend, but we need to watch that. People are going into LQD, right? So high corporate investment bonds are a good place to hide. FXI, right? We do have a kind of a vertical move in Japanese yen. FXI continues to go to rally. That's Bob mentioned that. What else working today? Anything else in green? Bitcoin is stable, so that's actually, I think, is positive, right? So at least short term, it's not, people are not nervous in Bitcoin. Nvidia is making new lows, right, to standard deviation, but short term oversold. Any other questions? Thank you. All right. Let's look at other sectors. Any questions, first of all? on the hedges, spiders. So in terms of the tools that we offer at Tradespoon, again, Stock Forecast Toolbox, you can look at the short-term prediction, right? You can look at the long-term prediction. 10-day, you can see spiders actually change to more of a neutral because it's oversold. We were pretty negative in the beginning of the week, right? This gets updated every day. QQQ is turning negative, right? It broke through the support, it was positive, and now it's, you know, it's accelerating to the downside. So you can see the trends, right? And you can see semiconductors also turning positive, basically saying that it's overdone, right? That it's overdone, and in, you know, in the next 10 days we should have some kind of a rebound. So that's Stock Forecast Toolbox. In terms of trade ideas, you can look at Active Trader, right? Active Trader, short-term signal for today, Bristol Myers, right? So we, you know, before obviously unemployment data, which ticked up, it shows that Bristol Myers is in strong uptrend. And you can see Bristol Myers is actually positive, right? People are going, you know, is the entire healthcare sector up, or is it just Bristol Myers? Let's see. Actually, healthcare is down, but Bristol Myers model did see that the Bristol Myers is, you know, outperforming the market, and it's positive on a significantly down day. So that's good. The model does a good job finding stocks that can outperform the market, right? Or maybe not positive, but at least not down as much. So, and you can also do stock or option trades, right? Option trades. And we give you suggested entry price, right? Using dollar cost average, split the trades into two, and then have entry one and entry two, right? Entry one, entry two, with a stop loss. Any questions on Active Trader? Right? If you look at the pre-market futures strategy A and basically see, well, unemployment is ticking up, you know, you have 2% move in spiders and QQQ, then you probably want to wait for predicted low, right? Predicted low. Otherwise, yesterday's close. So options basically uses the predicted low price for Bristol Myers, right? So you can go in and look at the Stock Forecast Toolbox. Bristol Myers. So support is at 46. Overhead resistance 48. It did turn negative. It shows you that it's overdone. Model basically says overdone, that you could have some consolidation, but still, you know, shows as a strong signal to the upside. But the trend is kind of, you know, neutral right now, or reversing, which is a common question, right? Why you recommend an Active Trader if the Stock Forecast Toolbox shows negative? I mean, it shows negative because we did have a pretty sharp pullback from after the earnings, but the gap still held, and it does show that, you know, for today, tomorrow, we could retrace back to 51. That's how you would interpret this information, right? So Stock Forecast Toolbox basically says, you know, consider buying at 45.93, right? Wait till it drops to 45.93 because of the short trend. Right. So that's why you have 45 call at 95 cents, 45, right? The predicted price option. Or if you, so today, I mean, it might not drop to that level. So then you might have to basically, what I usually do in a live trading room, I use 5 minutes candlestick. If you're doing day trading, right? You wait 5, 10, 15 minutes, and then if you see some support, then you go long. Well, in this instance, it actually, you know, dropped together with the market significantly. But that would be the setup, right? I mean, right now you would have been still down, but you can see that the stock is doing better than the rest of the market. Any questions on Active Trader? Right, so these are short-term signals. You know, you can hold them for a couple of days, couple hours. If you're holding them for a couple of weeks, you rely on an initial momentum, but obviously due to unemployment data or change in market sentiment, you know, then you kind of managing this on your own, right? If you want to hold it long, because you might say, well, Bristol Myers is healthcare and people are rotating to healthcare, and I think there's more room to the upside after the strong earnings in Bristol Myers. So that's active trader. We also have weekly trader, where we have weekly signals, right? So this, as of Monday, STX, right? One of the weekly ideas, probably down, right? I assume together with the market, but let's see if it looks better than QQQ. Well, not much, right? So we have in the beginning of the week, it looked pretty strong, but obviously after the earnings, looks like together with the market, everything, especially technology, everything that has to do with technology, mid-cap, large-cap companies, they're selling off. But this would be a weekly trader. And analogous would be a monthly trader where you have a long-term trends. So this is a good example where in the beginning of the week, there's a strong momentum to the upside, but that can quickly reverse with the market. Because when you have sharp rise in VIX, then most of the stocks are highly correlated and continue to drop. The good news is the dollar is dropping. That's usually good for the market, right? Part of it is FXI, right? Kind of a vertical move in Japanese yen. Let's see how's euro doing. Euro is also up, so usually that means risk on, right? Risk on. Weaker dollar is good for the market, so that's good. But I think because of the precipitous drop in interest rates, people are selling the dollar, at least initially. A little bit overdone, but same thing with 10 years, it's a little bit overdone, right at the 2024 low, right, December. Let's see. Any questions on the Elite Circle, on the Stock Forecast Toolbox, or the signals? So these are the signals that I trade in the live trading room, right? Active trader, weekly trader, or monthly trader. Not all of them, but some of them. If you actually want to see what I trade, you would go to Elite Orders, right? So Apple, I did Iron Condor yesterday with Apple, actually closed it, right? Closed the Apple Butterfly. Was a good trade before the earnings. Actually, Apple at least was positive at some point. I assume it turned in negative, or is it still positive? Yeah, so Apple is up 2%, right? So that's positive. That means that probably a pullback is gonna, slow down. This wave C probably is coming close to an end, right? Or at least overdone. Right, so C wave, we should have a bounce at some point, right? So D, and then the question is, do we have E? Right, usually it comes in A, B, C, D, E wave. But Apple is still positive, so that's good for the market. VIX is like just taking over. People are not hedged. People got caught by surprise and huge jump in VIX. Yeah, dollar is dropping, euro is climbing. I mean, when euro climbs, that's usually good for the market. Obviously, let's see. Germany kind of already at 200-day moving average, right? And Europe in general is also selling off. And usually when there is the recession, dollar does rally. Now I think this is more of a carry trade, and the fact that maybe anticipation that interest rates will go up in Europe, but will drop in United States. But VGK Europe itself also kind of have a sharp pullback. Already down probably what? Yeah, 6% VGK. Thank you, Bob. All right. Any other questions? right. All right, any other questions? So that's elite circle, right? So you can have example of trades like butterfly in Apple, right? Directional trades, which worked out well. I was actually able to close it yesterday, so it was a good decision. LA Lilly stock, the example of stock trade. LA Lilly is, it is the healthcare, but it has a very high multiple, and all the high multiple stocks are in trouble, right? It looks like QQQ position. I guess I'm waiting. Short term, it's oversold at the stock position, so I'm seeing if the slow is going to hold or not. Because if QQQ almost identical chart, and it's already at 2 standard deviation, already kind of trading below this level. So that opens the door to retest in April lows, right? So it looks like we're on our way to retest April lows. Any other questions? So what else we have? Let's look at the research. So if you want to look at the research center, we have seasonal chart. From seasonality point of view, we did talk about that usually August, September is downward bias, right? Downward bias, similar to last year. So I think, you can look at the seasonality chart. You can also look at the probability calculator. So right now it basically says 534 to 551. Right, so those are your main support levels, right? Right now it's 530 to 551 on spiders, and spiders already breached briefly. We'll see where we're going to close, but briefly already posted 528. So if this level doesn't hold, then I think there's more room to the downside. What are the significant earnings tonight? Oh, there's no earnings. Today's Friday, Bob. Sorry. So we're off, right? Enjoy the weekend. Today is Friday. We'll see where we're gonna close. Do join me or Keith at the closing bell. We might have a rebound, but if let's assume we close at these levels or similar levels where it's below 537, 536. I think that would be bearish for the market. That means that there's probably more room to the downside. So personally, I would probably consider hedging more if it does jump to 540 again. All right, any other questions? Yeah, thank you, Bob. All right, guys, then if there are no other questions, that's all I have. Andrei, Bob, Joseph, Peter, Thomas, Michael, Steve, John, thank you very much and have a great day.